This is about your peace of mind, your ability to sleep at night, your confidence in your financial future. And right now, that confidence is being shredded by a system that treats your life savings like chips at a blackjack table. The real pain isn't market volatility. The real pain is being told that volatility is your only option for growth when better alternatives exist but are kept away from regular investors by an industry that profits from your ignorance and your fear. That's crazy.
You've worked hard for your money. Now it's time your money works harder for you. This is the Profit Protocol, where cutting-edge AI transforms ordinary investors into wealth-building machines.
Welcome back to another episode. And I want to start today with a question that might make you a little uncomfortable. But how much sleep have you lost over investments this year? Because here's what I'm seeing everywhere right now. People are literally caught in an impossible trap. On one side, inflation is eating away at their savings account, and cash is literally losing value every single day. And on the other side, the markets feel like a casino where fortunes disappear overnight. Like just last month, we saw major indices swing 5% in a single day. 5%! That's not even normal. That's not normal market movement. That's chaos. And if you're like most people, you're watching your portfolio bounce around like a ping pong ball. And you're wondering if you should just pull everything out or double down. Because the traditional advice just isn't working anymore. Just buy index funds and hold for 30 years sounds great until you realize that strategy assumes markets will behave like they did in the old days. But we're not living in the past. We're dealing with supply chain disruptions, geopolitical tensions, central banks changing policies, and economic uncertainty that would make most seasoned traders downright anxious. So you're stuck. You know you need to grow your wealth. Retirement isn't getting any cheaper, and that house isn't going to buy itself. But every time you look at your portfolio, you feel that knot in your stomach, wondering if today's the day you lose everything that you've worked for. See, this isn't about money. This is about your peace of mind, your ability to sleep at night, your confidence in your financial future. And right now, that confidence is being shredded by a system that treats your life savings like chips at a blackjack table. We know this. So let me tell you about Callie Norris. Callie reached out to us about 8 months ago, and her situation is probably going to sound familiar to a lot of you listening. And as a mom of two, Callie barely had time for herself, let alone learning about trading or investments, or especially Forex trading. Like most parents, her days were completely consumed with school pickups, meal prep, helping with homework, and all the chaos that really comes with raising kids. So the idea of spending hours researching stocks or monitoring the market movements, that's completely unrealistic. But here's what was really keeping her up at night and might keep you up at night. She knew that there needed to be something going on that they could do with their money. Her husband, he's working hard. She was just juggling part-time work while parenting, but they were basically living paycheck to paycheck with maybe a little going into savings each month. And at the rate most people going, retirement feels like a fantasy. And the idea of building any kind of generational wealth, well, come on. For their kids, that doesn't even seem realistic at this point. So she opened a trading route, she opened an investment account, and she bought some mutual funds, and her bank recommended those. But between the fees and the minimal returns and watching her small investments bounce around with the market volatility, she definitely felt like she was not moving the needle at all. Meanwhile, inflation was eating away at her purchasing power faster than their investments were actually growing. So her husband started using Corvado, and that result was steady. It's not huge, and it wasn't flashy gains, but they were getting gains month over month. The returns had actually added up. And that's when Callie realized she didn't need to become a trading expert or spend hours analyzing charts. Because here's what she told me, and I'm quoting her directly. Corvado gave me a solution I didn't know I needed. I started using it after my husband told me that he was getting steady results and to set it up with him and help with the onboarding and all that stuff that the team did. And it just runs in the background. So the best part, I'm earning extra income while taking care of my kids. It's like having a silent partner working for you 24/7. So, I mean, think about that for a moment. While Callie's helping with homework, making dinner, or dealing with all the crazy demands of family, her money is working, not sitting in a savings account, losing value to inflation, not bouncing around in some mutual fund. They're based on market volatility. Is actually working and generating returns, building the financial future for her family that it deserves. And Callie didn't need to quit her job or ignore her kids to build wealth. She just needed a system that worked without requiring her constant attention and stress. So say it. Name the pain again. So, guys, this is the real problem we're facing. The traditional investment world has you convinced that volatility and risk are the same thing as opportunity and growth. They're actually have normalized the idea that building wealth means accepting that your financial future should depend on factors completely outside your control. Because if you think about it, when you invest in the stock market through traditional methods, you're essentially betting that corporate earnings will continue growing, central banks will make the right policy decisions, that geopolitical tensions won't spiral out of control, that consumer confidence will remain stable, technology disruptions won't like destroy entire industries overnight, climate change won't destabilize entire economic regions, and that's just not investing. That's gambling with extra steps. And the worst part, even when traditional investments work, they barely keep pace with inflation. When you factor in taxes and fees, so you're taking maximum emotional stress for minimal real result. But here's what really bothers me about this situation. It's completely unnecessary. The technology and the strategies exist right now to generate consistent returns while actually managing risk. Not just accepting risk as inevitable, but actively controlling it. See, the Forex market processes over $7 trillion every day. 7 trillion! That's more than the GDP of most countries, and it operates 24 hours a day, 5 days a week, across every economic zone on the planet. It's the most liquid, most efficient market that's ever existed in human history. And yet, most people are told to stay away from it because it's too risky. And meanwhile, they're encouraged to put their retirement money in a stock market that can lose 20% in a month based on single Federal Reserve announcements. The real pain isn't market volatility. The real pain is being told that volatility is your only option for growth when better alternatives exist but are kept away from regular investors by an industry that profits from your ignorance and your fear. So give them a way forward. So here's what we've developed at Corvado and why it changes everything. It's called Triple Shield Risk Management. This just isn't another investment strategy with a fancy name, which does sound fancy. This is a systematic approach to generating returns while actually controlling risk in 3 different levels. Let me break it down how this works, because understanding framework will change how you think about growing your wealth. And if you understand just one of these, it will blow your mind and you'll be ahead of 99% of the rest of the world. So, Shield 1 is position sizing control. Before we even think about entering a trade, we calculate exactly how much capital is at risk, not as a percentage of potential profit, but as a hard limit on potential loss. See, every single position is sized so that even if it goes completely wrong, it can't materially impact your overall portfolio. We're talking about risking 1 to 2% maximum on any single trade. Most investors do this backwards. They decide how much they want to make, then figure out how much they need to risk to get there. That's crazy. We start with how much we're willing to lose, then calculate and position sizes that keep us within those boundaries while we still provide meaningful upside. Now, shield number 2 is technical confluence. We don't trade on hunches or market sentiment. Every trade decision is based on multiple technical indicators pointing in the same direction. So, we're looking for situations where trend analysis, support, and resistance levels, momentum indicators, and volume patterns all confirm the same directional bias. This isn't about being right 100% of the time, though. That's impossible in any market. This is about making sure that when we are right, the probability was genuinely in our favor based on the quantifiable factors, not just optimism. Shield 3 is dynamic stop loss management. This is where most traditional approaches completely fail. They set up stop loss when they enter a position, they just hope it works out. Our stops are active and intelligent. They adjust based on the market volatility and they trail profitable positions to lock in gains and they tighten during periods of uncertainty. But here's the crucial part. Our stops aren't just about limiting losses. They're about preserving capital. So it can be deployed more effectively. Every dollar we don't lose to a bad trade is a dollar that can go to work for us in a good trade. So when you combine these 3 shields, something remarkable happens. You end up with a system that can generate consistent returns regardless of what's happening on the broader market. See, while traditional portfolios are going to be swinging wildly based on news cycles, on market sentiment, our approach is always focused on mathematical probabilities and risk adjustment returns. So, let me give you some concrete numbers over the past 12 months. While the S&P 500 has essentially, with fiat massive volatility, our triple standard approach has generated consistent monthly returns between 3 and 8% with a maximum drawdown of less than 5%. That means if you started with $100,000 instead of ending the year roughly where you started after an emotional roller coaster ride, you would have seen steady growth to around $160,000 with the largest single month decline being less than 5,000. But here's what those numbers don't capture. The peace of mind that comes from knowing your money is being managed with actual risk controls and not just market timing and hope. So this is empower them to take action. Now I want you guys to do something specific after this episode ends. I want you to audit your current risk exposure because I guarantee you're taking on way more risks than you realize. First, here's what you do. Calculate your maximum potential loss in a single day. Look at your current portfolio and ask yourself if everything went wrong simultaneously, what's the absolute worst case scenario? And I'll be honest, most people have never done this calculation, and the results are usually kind of shocking. Because if your answer is more than 10% of your total investable assets, you're definitely in the danger zone. Second, identify your correlation risk and how many of your investments would move in the same direction during a market crisis. If you own multiple stocks, index funds, real estate investments, and bonds, you might think you're diversified, but in a real crisis, all of these tend to move together. True diversification means having strategies that can profit regardless of market direction. So the third is examine your emotional relationship with your investments. If you're checking your account balance more than once a week, if market news affects your mood, if you've ever made investment decisions based on fear or excitement rather than analysis, then you're not investing. You're totally gambling. And you're gambling with your financial future. So here's what I want you to understand. You don't have to accept this level of stress and uncertainty. The triple shield approach isn't some theoretical concept. It's actually proven, and it's a proven system that's working right now for people just like you and me. So if you're tired of watching your wealth disappear, reappear, and then based on factors outside your control. If you want to build real wealth and without emotional roller coasters, if you're ready to take control of your financial future instead of just leaving it to the market or the market sentiment, then here's your next step. Go to corvado.com and request a risk assessment report. And this isn't a sales pitch, it's just a detailed analysis of exactly how much risk you're currently taking and specific steps that you can take to reduce that risk while actually increasing your potential upturn. Yep, what this report will include is our complete triple shield risk management framework, real case studies from the clients who made the transition, and probably a step-by-step implementation guide that you can use regardless of whether you work with us or not. But here's the thing. This offer doesn't last forever, and we can only work with a limited number of clients because our approach requires active management and personal attention. We're not running a mutual fund where we can scale infinitely. We're actually building wealth for specific individuals using strategies. And that requires focus and precision. So, if you're ready to stop gambling with your financial future and start building wealth systematically, then go to corvado.com right now and don't wait until the next episode or the next market crash to realize that hope is not a strategy. Your future and your future self will be thanking you for taking action today instead of waiting for the perfect time that probably will never come. Because the markets don't care about your timeline, your goals, or your stress level. But we do. And we've built a system that works regardless of the markets and regardless of what they decide to do next. That's it for today's episode. So remember, wealth doesn't have to be an emotional roller coaster. It can require the right system and the right risk management and the right team. So until next time, guys, stay focused on what you can control and let us take care of the rest.
Don't just listen, level up. Head to corvado.com now and book your free demo and let AI show you what your money's really capable of.